Hi everyone, my name is Rick Bensignor. I'm president of Bensignor Investment Strategies. That is our consulting arm for institutions, and also president of In the Know Trader. That is our consulting arm for individual investors. Today for Dukascopy, we're going to talk about two different things. Number one, results. We're in a results-oriented business. This is all about making money. So are you making the type of money that you want to be making? Are you making the type of money that you should be relative to the risk you're taking? And you're making money from the newsletters and subscriptions that you receive. How are those people doing for you? So we'll talk about that. And then secondly, let's talk about the US 10-year. So rates are still in and around 2%. They happen to be higher today, touching around 2.08, but last week they were at 1.95%. The question I posed to you, was the 1.95% US 10-year yield from last week the lows of the move? And if so, where are rates going to next? That's what we'll talk about. Stay tuned. Hi everyone, I'm Rick Bensignor, president of In the Know Trader. And this week for Dukascopy TV, we're going to cover two subjects in the few minutes we have together. The first is about results that you're getting from trading, results that you're getting from help you're getting trading, subscriptions, and other type of advice you get. And the other thing we'll talk about today is the US 10-year Treasury market. Last week yields reached 1.95%. They're trading up at about 2.08% today, and the question is, was last week's low in yields the low we're going to see? Or is this just a temporary rally and much lower lows to come in the future, the way most people think? So we're going to talk about that. Let's first talk about results. So look, we are in a money business. The whole reason people trade is to make money. Now, you invest for growth over time, but you trade in the shorter term to make money. And how are your results doing? Are you getting the type of results you expect to get, especially given the risk you take to make those results? Are they in line? These are things that you want to look at on a fairly frequent basis to make sure that if I'm going to take X amount of risk, I should at least be making, let's say, 2 times that in return. And if you're not lining up your trades properly. It doesn't mean every single time you trade you have to have at least a 2-for-1, but generally that's what you want to give yourselves as a minimum risk-reward ratio. The other thing let's talk about are the type of results you get from newsletters you subscribe to and outside source information in order to make some of the decisions that you do. So I want to show you the results that we've had here so far. In 2019, my institutional newsletter called Supposedly Irrelevant Factors, and again, this is a paid-for subscription only for institutions. In the first half of the year through June 30th, we made 68.7% on invested capital. So what capital we put to use collectively, you made 68, almost 69%. With a profit factor over 9. What's a profit factor? Well, this is a statistic that most hedge funds use in part of their marketing materials. It shows how effective they are about managing risk. A profit factor is a ratio that measures how much money did you make on your winning trades relative to how much money did you lose on losing trades. Anything close to 2-to-1, meaning that you made $2 for every dollar you lost, is considered good. We're at 9.17. That means you've made over $9 for every $1 lost. For all our recommendations, that was 14 of them in the first half of this year. Last year, we made 24% on a year that the market was actually down. We had a profit factor of 1.73, just beneath the 2 that I and most people like to see, but pretty darn close, meaning you made $1.70 for every dollar you lost. And in 2017, we made 75% on invested capital with a profit factor of 6.67. Collectively, I will tell you from somebody who's been in the industry now almost 40 years, these are phenomenal numbers. They're not a one-off from one year. we consistently not only beat benchmarks, but do them with outstanding profit factors, something that you want to consider when evaluating the work that you're going to subscribe to, which outside newsletters it's worth paying for. Okay, now let's move on to taking a look at the chart of the U.S. 10-year. And we're going to start here with a daily chart. In fact, I'm actually going to switch this. Let's make it a weekly, and then we'll come back to this. So look, here's a basic weekly chart. It's got some trend lines drawn on it, as well as some DeMark propulsion levels. So obviously, we have the long-term double low at just beneath 1.4%. In TNX terms, that's 14. Remember, TNX trades at 10 times the value of the U.S. 10-year yield. So this is an index. You can trade options on it, but it is not an ETF that is tradable. But it's the easiest way most people know where the U.S. 10-year is trading. Pull up a quote request for TNX, and again, it trades at 10 times the price. So the current price right now is 21.01. That's the same as 2.101%. So yields continue to move up today, and we're up to 210. So here's the weekly chart over time, and you know we broke the major uptrend line from the secular low. We've broken underneath near 2.8%, kind of an ascending type of higher highs with equal lows or close to equal lows. And here we are, we get down to 2%. So for over a month, in fact, I think it's 5 weeks now, we've been writing clients that as long as yields stayed above 1.95%, bonds were still in a potential bottoming pattern. And I was a net seller of bonds anywhere down here in the low 2% level, all the way down to 1.95. I think we ticked 1.949 or something close to that for a brief moment. 1.95 held. And then a week ago, we went from 1.95 to 2.05 in a single day, closing at 2.04. So when we add on some of the other models we look at, one of the things that I want you to notice is, and here I'll use a little ellipse, is on the bottom, we made both a DeMark sequential 13 bottom, which indicates downside exhaustion of trend. At the same time, a week or two later, we had a setup 9 count. Setup 9 counts often give short-term turns in the market. Those two coming together give me better feeling as if, yes, indeed, bonds have made the low for now. Not only was it against basically the lows from 2017 when we got down to 2.03%, so we extended a little beneath it, but we've turned right back above. So that's one of the main things I'm looking at. And we've been telling clients that over the summer you'll likely see 2.23%. So now let's switch this to the daily chart and go back. And here's the daily chart. And what we're seeing here is, too, that the daily chart also had, in the daily time frame, a sequential downside exhaustion signal. The risk level on that was 1.945, essentially 1.945%, 19.45 in TNX terms. And you can see we held that, we went right to it, we've turned around, and we're moving higher. And actually, right now, as we look, we're about to take out yesterday's high. My target, as I said, was 2.23%. That was this propulsion target. If we get there, it'll kind of be just about where rates will bump up against the cloud, depending upon how much time it takes to get there. But we do think 2.23 is something that we could easily see this summer. We've got clients into this already, playing for a higher move in yields. And we are playing for that. The 1.95% low is going to be the low for a while, and that yields will move up. So that's how we answer the question. Yes, that's the low. So we only need to risk maybe, same thing, 10 basis points to make 15 to 20 or more. We'll get out of some at 2.23, and we'll probably let the rest run. And that's also how you properly manage risk. The other thing is this goes against what most people think, and the best trades usually are the ones that are out of consensus. So that's it. So again, we talked about results, and it's how you need to look at your own results as well as the results you get from other people that you pay to get advice from, and our view on the U.S. 10-year. So that's it for this week. We'll see you again soon. I'm Rick Bensignor for In the Know Trader and Dukascopy TV.